A lot happened today that could affect Silicon Valley real estate, and the signals are conflicting. Inflation is still running hot, consumer spending slowed, and Nvidia just reported another massive quarter, and Salesforce raises its outlook as AI demand continues to grow. So, what does all of this mean if you are thinking of buying or selling a home in Silicon Valley? I'm Anti with Compass, helping Silicon family buy, sell, and build wealth through real estate since 2001. Let's connect the dots. Today's inflation report shows prices are still rising faster than what the Fed wants, 3.7% compared to its 2% target. At the same time, consumer spending barely grew in July, which tells us people are starting to pull back. So, we have a sticky inflation and more cautious consumer, a combination that could keep mortgage rates higher for longer. Normally, that would be a major headwind for housing, but Silicon Valley has another force working in the opposite direction: AI. And Nvidia just report more than $96 billion in quarter revenue, more than double last year, and expects about $108 billion next quarter. Salesforce also raised its annual revenue outlook as demand for its AI and data products continue to grow. Why does all this matter to real estate? Because in Silicon Valley, the stock market isn't something people watch. It can become someone's down payment. RSU stock appreciation, bonuses, and high-tech compensation can create significant purchasing power. And here's another interesting signal. San Jose rents are up roughly 8% year over year. That tells me housing demand hasn't disappeared. Instead, affordability is keeping many people renting longer, and investors are noticing that opportunity too. But that does not mean every Silicon Valley home is going higher. The market is becoming much more selective. A well-prepared home in a desirable neighborhood and priced correctly can still attract strong competition. An overpriced home or property with significant compromises can sit for a while. I'm curious what happens if inflation eventually cools enough for a mortgage rate to fall, while AI wealth remains strong. We could see affordability collide with significant pent-up housing demand. But if inflation stays high or tech employment weakens, we could see a very different market. Forget buyers or sellers market. Real estate is local. Reach out and let's build the right strategy for your real estate move.